Is the market crashing and are we heading into a downturn in the real estate market? No, but there are changes buyers and sellers are experiencing. Here is the latest update for Olympia Real Estate. Hi, I'm Francine Viola, Realtor in Olympia, Washington, helping both buyers and sellers. And because I help both buyers and sellers, I get both perspectives on what each is experiencing. The biggest question from both is the market crashing and what does this mean for the rest of the year? First of all, the market is not crashing. It is changing and there are a lot of conditions buyers and sellers are dealing with right now, including interest rates, inventory, inflation, and perception challenges. Let's talk about interest rates first. Rising interest rates do not mean the real estate market is tanking. By the Fed's raising interest rates, the goal is to slow down the rate of inflation and slow economic growth without causing a recession. For buyers, higher interest rates impact their buying power, and some buyers will be priced out of the market. There are solutions to this. Buyers may have to look at more affordable markets, and buyers will need to look into lending solutions like finding the right loan type and loan product to lower the interest rate and monthly payment. Be sure to talk with your local reputable lender to find out your options. The Washington Post recently wrote, "The low rates of the last few years were an anomaly, a combination of a freakishly low interest rates and Federal Reserve intervention in the bond and mortgage-backed security market. Now the Fed has ended quantitative easing and is raising rates." The key points are rates were freakishly low and the Fed has been slow to make adjustments. These adjustments probably should have been made a year ago, but instead it's now a rush to adjust, and this is why we are seeing the rapid rise in mortgage rates. But this doesn't mean buyers have missed their opportunity to buy, because home prices are still going up and interest rates are expected to increase this year. Inventory is increasing now, but this is exactly what happens every spring and summer. This is not an indication that the market is blowing up. This is the normal trend where more sellers will list their homes this time of year. More inventory eases up those bidding wars, and buyers and sellers are seeing this. In our office for May, the average number of offers per listing was 2.1 offers compared to 2.7 and 4.6 offers in the previous 2 months. You may have been noticing more price reductions. Some sellers are overreaching on price and some are making price reductions within days of listing the home because they didn't get the expected rush of showings and offers. The reality is prices are still moving higher than normal. This chart shows the impact of low inventory on sales prices. The fewer the homes available for sale, the steeper and higher prices rise. Demand remains persistently strong because our market still does not have enough homes to meet the buyer demand. We are currently at 0.77 months of supply, or about 3 weeks. For May, the median home price in Thurston County is $481,272, which is up 19.2% from last year. Year-over-year price gains most likely will go down over the next 6 months and may average 9 to 10% year over year instead of the unusual 20% that we've seen for the last 6 months. We are all paying more for goods and services. Even without inflation, we were and still are dealing with supply chain issues, which is affecting the rising costs of goods. But the interesting point here is real estate hedges against inflation because home prices have outperformed the rate of inflation. The blue lines are home appreciation. Last year, the inflation rate was 6.8%, while national home prices increased by 18%. For the last 50 years, home price appreciation has outperformed inflation. Real estate is a tangible asset that holds its value. This is one of my favorite graphics because this sums up how buyers and sellers are reacting to the relative rise and fall of home prices and the market overall. Buyers and sellers experienced tremendous growth and dealt with a frenzied market these last several months, and it felt like it was 109 degrees. Now that there is a cool down to still a hot 84 degrees, people automatically think, well, we must be in a recession. If we do get to a recession, we are at least economically stronger than we have been in past recessions. The good news is unemployment rates are exceptionally low, and this is an important indication of the health of the economy. The demand for housing is still strong, and combined with low inventory, home prices are still going up, but not at this searing hot rate as in the last 6 months. Buying or selling a home isn't like buying or selling stock. You can't time the market or the future of interest rates. Even though the market is changing, some buyers are thinking they will wait to see if prices fall, but that isn't what experts are predicting. And I too predict home prices and interest rates will continue to rise between now and the end of the year. My advice to buyers now is this summer is a fantastic time to get into the market because we are not seeing as many bidding wars, and buyers have a much higher success rate in winning the house than they did earlier this year. As inventory levels seasonally go back down in the fall and winter, we may be right back into a very competitive market. For sellers, your advice never will change. Pricing right for the market will always be critical to getting the most this market can give. Sellers now also need to brace themselves for being on the market for a little bit longer and may find themselves negotiating more with buyers. This is all okay, and we can get through it. This market is still exceptionally good for sellers. Want even more stats? Be sure to check out my companion blog post on this topic in the link below. If you are considering making a move, contact me today. Thanks for watching, and I'll see you next time.